Good morning, Richard Calhoun, Creekside Realty, here to discuss the Silicon Valley Bay Area real estate market for the past week. We're going to dive right into the data. We're looking at the active listings. You read those over on the right-hand axis. It's the great bold gray line. You can see we have right around 3,700 active listings in the four-county area. Moving on to offers accept, this is the demand side of the equation. We're only selling around 2,400 homes in the Bay Area. And then we move on to DUI, which is the key indicator. That's right off of the left-hand axis. You can see we're up around 55 days of unsold inventory, which is a balanced marketplace. Anything below 40 is considered to be a red hot marketplace. Anything above 80 is considered a nice cold marketplace. Clearly, it's a graduated scale. The white is sort of a balanced marketplace. So we're sort of on the hot side of a balanced marketplace. I would call it a balanced marketplace. DUI for each county. So now we're breaking out the four counties. You have Santa Clara County, Alameda County in the dark orange, Contra Costa County in the gray, and San Mateo County in the yellow. You can see they're all doing fairly similarly, the fairly similar patterns. You can see Santa Clara County has been below the other three counties until very recently, where it looks like Alameda County is basically at the same level. Remember, DUI, a low number, means a faster paced marketplace, which tends to be good for the seller and for appreciation. This is a pretty strong marketplace overall, but these two counties, being Alameda County and Contra Costa County, are doing slightly better than the other two counties. Moving on to the overbid, this is the magnitude of overbidding. This is where you take the sale price to list price ratio, and then you see what the average is. Here in Alameda County, you can see that they're still getting 4% above the seller's asking price. The other three counties, being Santa Clara County, Contra Costa County, and County, basically exactly what the seller's asking, a little bit above, a little bit below, but basically right at 100%, which is what you would expect long term. Even in a balanced marketplace, buyers tend to go in and offer the seller pretty close to their asking price. If the seller is priced too high, the buyers tend to wait until the seller lowers their price. This is the same concept, but what it's doing is looking at each week. The dotted lines are the oldest lines. The red dashed line on the outside is the best week we ever had, which was April the 12th of 2022. The worst week we ever had is down here, which was November 30th of 2001 after the World Trade Center. If you start paying attention, the dotted lines are the oldest, then the dashed lines, and then the solid lines. So basically what you had is the market was improving, and that really isn't on the data. The data basically starts pretty close to the peak of the marketplace. We then cooled down on the dashed lines. Then you can see there was a big jump down, and then they started getting close together, and the solid lines are essentially on top of one another, which is why I would consider ourselves in a plateau. That's why I have both the red hot improving marketplace and the ice cold decreasing marketplace on the graph, as we're sort of indicating it's in a plateau. Now we're looking at what a lot of people were worried about, is sale price. You can see the prices were higher earlier this year in 2022, and you can come back and see where we're equal to, and each county is a little different, but basically you're equal to right around April 1st of 2021, which is an unfortunate time period, because you can see that that's a time period where you have rapid appreciation. When determining what a value of the property is, I'd probably go back here to 2020 back here, and then I would also hit 2021, and then I would use the latter part of 2021 and say that you're just about right on the money of where you were in 2021 for Contra Costa County. For Alameda County, you're below where you were in the fall of 2021. So you have to look at each county individually, and that's why I got involved in this, is to, I never agreed that the Bay Area counties, when you did all 9 Bay Area counties and you looked at what to determine what the market was doing based on the average number of those 9 counties, it's a garbage number, really. This is looking at the specific. The left-hand side is single-family homes for each of the counties. The combined is on the left-hand margin for condos and townhouses, same concept, but the combined is on the right-hand side. The green is sort of the font as sort of the important items, and that is whether your current inventory is increasing or decreasing. You can see overall it's decreasing, and you'd expect that at this time of the year, but you can see Santa Clara County actually increased, which is a little bit unusual. unusual. And then you jump down to the number of offers accepted in the past 5 weeks. And I jumped to 5 weeks because 1 week is too volatile. You really can't tell what's happening with market trends. And you can see the volume of activity is going down, the volume of offers accepted, therefore the percentage is going down, and you'd expect that. Contra Costa County, it sort of stands out as improving, which is unusual, but I've commented before that Contra Costa County is the county that slows down the least going into the end of the year holidays, and its percentage of market share actually increases. Then your DUI, which is based on 5 weeks, has it gone up by a half a day. In Santa Clara County, it's gone up by 3.5 days. My general rule of thumb is if you go up or down 5 days per week, that's pretty significant change. So Santa Clara County is on that, approaching that 5, but it's not quite there. But in general, the market's slowing down, and you can see Alameda County condos slowed down, and the condos overall slowed down at 1.3. And the reason a positive number is a slowdown again is because as DUI increases, the market's taking longer to sell, to turnover, and that kind of thing. Then you look at your median days on the market, they're basically, 16 days on the market. Then you go to sale price to list price ratio. 41% of the sellers are getting more than their asking price overall, 49% in Santa Clara County. Alameda County is the low at 34%, but it's sort of bizarre because when you look at their combined, Alameda County was doing the overbid, and I guess I need to look into that a little bit because when I come down here to look at the average and median overbid, it's right in line. The one that stands out is the average for Santa Clara County being at 104%. The median, which is what I would normally follow, is at 100% even. My suspicion, looking at these numbers, is that someone in Santa Clara County reported a sale price, a factor of 10 or a factor of 100 or a factor than 1,000 higher than they should have, and I didn't catch it because I would have expected this number to be very close to 100%, and then everything would make sense. So I suspect that this is a data error, which is one of the reasons I do so much data, is to catch errors. The size of the database, there's basically 500,000 records in here going back to 1998 for the 4 counties, both types of properties. And when you're bringing in properties quickly to get ready for the presentation, yes, I catch a lot of the errors, but when you're having that volume of lines in a spreadsheet, which is a 100 meg spreadsheet, every once in a while one slips through, and there was one 2 weeks ago, I think, for Alameda County, and now I think we had one slip through for Santa Clara County. So just for recap, what we've been talking about is the Bay Area data focused on single family homes. We're looking at 4 counties, which are Santa Clara County, Alameda County, Contra Costa County, San Mateo County. I believe the 5-week moving period is more representative of the marketplace. We're using a reference years of 2014 through 2021. Here we have the root URLs. The green is what I consider my root URL. You add 2022, the year, and you get to the live presentation Saturday morning at 9 a.m. You add in the letter H, the year 2022, the month 11, the day 12, and you get the handout, and it is posted. And then you can go to the archive, which is the root URL, add in any specific year, month, date code, and get there. With that, do I have any questions before I go into some details? Not seeing anyone unmute themselves. Let's proceed. Okay, now what we're doing is we're looking at DUI in the purple. The other 2 lines are the red line, which is the 10 percentile. So that's the lowest 10 percentile DUI has ever been for the 4 county area. Keep in mind, again, DUI being low is fast, and that's why it's red hot. Likewise, the blue line is the 90 percentile. A high DUI is an ice cold marketplace, and that's why it's blue. The gray line is the median. And so then where we are now is the purple. You can see that the purple is higher, so we're slower than we've been at any time in the period of 2014 through 2021. This is the DUI minus the delta. So I'm looking at the DUI for the 4 county area for single family homes, and then I'm subtracting off the median for that same week. We just finished up November 11th, and I'm comparing that to November 11th of last year in 2021, 2020, all the way back to 2020. subtracting the median from it. So you can see that we're slower by 20 days. So we're 20 days slower now than we were for the median at this time of the year over those 8 years that I'm using. Now what we're doing is looking at DUI for each county. So you can see Santa Clara County was doing better than most, and Alameda County caught up just this last week. And then you have San Mateo County and Contra Costa County. So you can see what's happening in all 4 counties. You can see globally, they tend to trend very similarly. There is some separation at times, but at other times they're right on top of one another. This is looking at the number of offers. Again, the same concept where the blue line is the lowest 10 percentile and low number of offers is a cool marketplace, which is why the line is blue. Likewise, the 90 percentile in this case is red because that's a hot marketplace. The gray line is the median, and the purple line way down here is the number of offers accepted. So basically what you're doing is you're saying we've only accepted somewhere around 2,300 offers in the last 5-week period of time, and that is the lower number than we've ever done for those 8 years that I'm using as my reference years. Now you're taking the delta DUI and subtracting the median, and you can see that because this is raw count. So now you're missing about 1,200, maybe 1,100 offers. So normally you'd have about 1,100 more transactions than you normally do for this time of the year. You can see that, during the pandemic, the initial close down, we did about 2,200 fewer, but also you tend to sell more houses in May than you do in November. So that's why I look at things on a percentage basis as well as a raw count number. So here's the number of offers. San Mateo County is down here not because it's the slowest, but because it's the smallest county. And you can see that Santa Clara County right here in the blue is pulling away in the negative direction or a little lower direction from Contra Costa County and Alameda County. So the number of offers being accepted in Santa Clara County for the last couple of weeks has dropped down much more rapidly than the other counties. They're all basically in the downward direction, with Santa Clara County being the most. So the vertical line back here is October the 1st. That's probably somewhere around October 21st or something like that. And then and this would be November 11th here, you can see we've dropped quite a bit in Santa Clara County, where the other counties, they're clearly in a downward trend, but they haven't dropped that much in magnitude. This is the market share. Here you can really start seeing that Santa Clara County is coming down. You can see Contra Costa County is improving, so it's increasing the market share. You can see Alameda County and San Mateo County are fairly flat. This is looking at active inventory, the same concept. Low inventory is a red hot marketplace, so this is the hottest you'd expect the market to be. A blue line is ice cold. That's the highest inventory you'd expect to have. And we're basically right at the level of inventory you'd expect to have. We were actually having a shortage here earlier in the year where it seemed like sellers were pulling out of the market almost more rapidly than the buyers were, causing this shortage of inventory, even though you had a slowing down of the marketplace, which was something I didn't expect. Yes, I expected sellers to pull out, but not as rapidly to have a actual shortage of inventory compared to where you'd expect the number to be. This is where you take the active inventory for the 4-county area, subtract off the median for the same day of the week, and here you can see the shortage I was talking about, and now you're basically right back up at the median. You can see there was a shortage late last year and earlier this year, which you expected because the marketplace was so hot, everything coming on the marketplace was selling, but then to have a shortage, it wasn't as a great of magnitude, but to have a shortage during the time when the market's slowing down is not what I don't think most people would have expected. This is looking at the magnitude of overbidding, and what you do is you look at the paired lines. The 2 blue lines are your 97.5 percentile and your 2.5 percentile. And the reason I do that is to eliminate those misreports that I miss and aren't able to manually correct. It's sort of my artificial max min that I don't have to worry about having data errors in. 95% of the homes sell between those 2 points. The paired gray lines are your 10 percentile and your 90 percentile. So 80% of the homes are between those 2 lines. It's the green lines that are the 25 and 75% of the marketplace. So 50% is in between here. The dark green line is your median, which is why I typically don't follow the median for this one indicator, because it's going to spend a lot of time at the axis of 100%. Instead, I follow the dotted line, which is the average. Here you take the magnitude of the overbidding for the 4-county area is you subtract off the magnitude of overbidding that you would expect, and then you plot it. Earlier this year, you were having a huge amount of overbidding, and that was as the market was cooling down and as those escrows closed. And you can see how rapidly the magnitude of overbidding dropped, got below the level you'd expect by about 2.5%, and now it's coming back up to the level you expect. The reason that's happening is not necessarily an improving of the marketplace, but it's buyers and sellers adjusting to the new marketplace, because typically the sale price to list price is going to be very close to 100%. Sellers tend to be very resistant to lowering their price, and buyers are even more resistant to offering below their price, instead waiting for the seller to lower their price before they write an offer. Here's the magnitude of overbidding for each county, and here you can see Alameda County is way outperforming the other 3 counties, and this is where I'm having a little trouble, and I'm going to have to try to look into this. Here I'm showing I'm at 104%. I know what happened. I got my Alameda County and my Santa Clara County data reversed. So in the table, for some reason, I posted the 104 that I was talking about wasn't really Santa Clara County, but was in fact Alameda County data. That would make a whole lot of sense. So sorry about that. Here's your delta overbidding. So, and this is where you subtract the median for the 4 counties for the same day of the week. So you can see that Alameda County is outperforming the other 3 counties, and the other 3 counties are underperforming the 4-county combined, because Alameda County is doing so well. If all the counties were doing the same at the level you'd expect, you'd be right on the black or horizontal line. Here's the overbidding. We're about ready to go into a movie, so I'll explain this to you a little bit. The purple line is the current line, so that's the current last week. The dashed blue line down here is the worst week we ever had. Again, that was November 30th of 2001. The red dotted line up here, dashed line, was the best week we ever had, which was just April 12th of 2022. Now remember, that's later than the March 26th week that I was using earlier part of this year, but that was before I brought in Alameda County and Contra Costa counties, and Contra Costa County was really instrumental in delaying that. I think it was Santa Clara County actually reached its peak probably the week before the 26th. Then San Mateo County reached it around the 26th. Alameda was around April the 4th, and then Contra Costa County came in much later. I think it was about the 19th. And overall, when you combine the data, the best week of the 4-county data was April 12th. And then the one dotted line here is a year ago. So what we're going to do is we're going to add in dotted lines that are going back a month at a time until we have 8 lines. Then we're going to change the dashed lines to go back 1 week at a time when you hit 13 weeks. So here we go, and this should be automatic. So you're going up a little bit. That's the second line getting added in, and that's why the up red arrow, another red line added in, and a huge jump up, another little jump up. You can see it down over here. Now you're coming back down, which is why I've added in the blue line, and now you've jumped down significantly. So that's why the blue line only. Down here again, the blue line only. Way down here, you can see the fallback was pretty abrupt, and now you're starting to take little steps, but still in the downward direction. And the closer you get to the dashed blue line here, the harder it is to get that line to continue to move. But now, see how little that orange dashed line was? So now I'm going to bring in the plateau, because you're not even seeing the solid blue line, the solid lines. And if you look up here and over on the right-hand margin, like right there, you saw one pop up there. And there's another one that just popped up. So I'm adding the lines, but they're popping up exactly on top of the purple line, which is why I'm saying we're in a plateau. So we're only 3 weeks ago, and there's been no change 2 weeks ago. And I also boxed the green up here so you can see what day we're talking about. And now I'm actually calling this +1 week, but that was when I was labeling this November 15th. I have mixed feelings. The reason I was doing that is it's less work on me, but it's also a misrepresentation because it is only data through the 12th. This week, at least, I updated that to show the 12th. You can see that we're sort of a plateaued. We're closer to the blue line than we are the red line, but you can see what the real key is where the line breaks away from the horizontal axis. So basically right here at 40% is 40% of the sellers are getting more than asking price, 10% of the sellers are getting less than their asking price, and roughly 40% of the sellers are getting, 10% are getting exactly their asking price, 40% are getting less than their asking price, and that adds up to 90. So those are just rough approximations. Moving on to the next slide, here's the actual sellers that are getting their overbidding. You can see that the number is probably about 41% of the sellers are getting more than their asking price. And again, this is single family homes, the 4-county area, a 5-week period of time. Moving on, the bold orange line is the number of sellers are getting less than their asking price. And you can see that number is closer to like 47, 48%. And then moving on, the gray line is the people that are getting exactly their asking price. That would have been on that horizontal 100% line, is basically right at 10%. Here's the frequency of overbidding for each of the 4-county area. You can see that Contra Costa County is way below the others. You can see Alameda County is significantly above. Alameda County and Santa Clara County are pretty close together. You can see Santa Clara County was sort of doing the second worst until like the last 2 weeks, and Alameda County basically did a pretty major drop down. Here's the delta overbidding. This is where I take each county individually and subtract off the 4-county area. So you can see Contra Costa County is doing significantly worse. You can see San Mateo County and Santa Clara County are doing roughly the 4-county median, and Alameda County is doing significantly better than the 4-county median. Here is the sold price that we saw earlier, and we've already talked about this. You can come back and pick what time frame you want to do your analysis to. You definitely would not want to pick the peak earlier this year because, did the seller sell right here? Did the seller sell here? Was the seller and buyer really fully aware of where the market was? When you have a huge run up in price like San Mateo County did, the market's imperfect and not everybody's getting very, market value. This chart I've had for a while, but I've tried to add some more information. This is the number of offers that accepted. This is 1-week data. And basically what the red lines are the hottest years, the most offers accepted. The blue are the coldest. And then the yellow highlight is the current year. You can see that this 1 week we did the highest, which is why it's the red overwrites the yellow. And then here I should actually have had this being you can see the previous low was 829, and now you're at 538. And there is 2007, and I don't know what that graph is. I'd have to break and get into the spreadsheet. Now we're looking at the blended data. So now we're looking at single-family homes, condos and townhouses, San Mateo County, Santa Clara County, 5-week period of time. Here you're looking at the DUI. DUI is the leading indicator. It just gives you an idea over time. The peak of the market was several weeks earlier because, if I did it any less, it would be hard to really see the change, the dates. So we're going back to June 11th. That's back 5 months. And you can see that we were cooling off, then we were heating up, and I would actually maintain we're cooling off again a little bit here, although it's pretty close to a plateau. If you come down here, these areas here have cooled a little bit, where these up here, the heart of Santa Clara County is sort of at a plateau, where San Mateo County is cooling off. The condos are sort of at a plateau. Here is looking at the heat map. So this is DUI. Here, the bluer the color, the more the days of unsold inventory, the slower the marketplace. The redder the color, the hotter the marketplace. Again, you can see a fair amount of Santa Clara County is in a hot marketplace. I mean, you're looking at days around 30 days of unsold inventory. That's a pretty aggressive number of days on the marketplace. Yes, there's slow areas like downtown San Jose, East San Jose at 55 days, or South County at 64. But you go up to San Mateo County and you'll notice it's mostly white, and that's because they're around 55, 60 days of unsold inventory, and between 42 and 77 is no color. One thing that I am going to most likely do is I think I'm doing the shade to solid blue way too rapidly. In other words, I go from 42.5 down to 7, which is basically a group of 35, and going from 77 up, that's only a group of about 35. I think this needs to be about double going down, and that's because you can go a lot higher. The main motivation is this is already saturated, and I like to see some trends. So this number didn't used to go down to 7 until this year when we got into such a hot marketplace, and I think I'm going to have to raise this 110 to like 145. And that may sound crazy. The market tends to slow down pretty abruptly, and when the market slows, we've had DUI up around 300. So to be saturated out at 110 is pretty early in the game, and it just feels wrong to me. I did not adjust the cooling side when I adjusted the hot side. So I've changed my scale down. I need to change my scale up. This is the magnitude of overbidding, same concept. The redder areas like Cupertino are getting more overbidding. Most of the areas are white, and you can see that some of the areas have a shade of blue. At 98.5%, it's got a 0.5% of coloring added into it. Here is the frequency of overbidding. Frequency is less significant than magnitude of overbidding. This is how common overbidding is. You can see a little bit more blue and then a little bit more red in the Cupertino Sunnyvale area. This now has nothing to do with the speed of the marketplace, but simply whether you're above or below the median price, which is basically Redwood City. The redder the color, the more above. The bluer the color, the more below. The middle number in the table is the median for that micro market area. The number to the left is the lowest 10 percentile. The number to the right is the highest 10 percentile. So 80% of the homes sell between 900, we'll call it 800,000 and 1.8 million. So $100 million range, and the median is 1.2. And that is, you can use that logic on each of the areas. This graph here is showing you the different micro market areas, the DUI of the different micro market areas, the magnitude of overbidding of the different micro market areas, the frequency of overbidding of the different micro market areas, and then the sale price. So the concept is a consumer is probably going to start over here, find the price range they're in, and realize the conditions they would suffer. A real estate agent may say, hey, I'm working in this given area. What are the conditions I'm experiencing? And then go accordingly. This table is taking the key indicators. I did catch a logic error in San Mateo County, so that's why the areas dropped down so dramatically. When I added in the 4 county areas, I was using the entire inventory for San Mateo County. Historically, in San Mateo County, I don't use the inventory and I ignore outlying areas like La Honda just because it's so different and it's such a small magnitude of the marketplace as far as the number of transactions that actually happen. So this shows a fairly marked improvement from last week, but I went back historically and corrected my data. I can't do that for published data, but going forward. So San Mateo County has a slight more inventory than you'd expect, but still what I consider to be a balanced marketplace at 115%. Santa Clara County single family homes, it still has a shortage of 82% of the inventory you'd expect to have. Santa Clara County condos is balanced at 113%. The base cities, the reason it would indicate you have a huge surplus, but that's actually because a lot of condos were built earlier in the 2010 through 2018 timeframe. Those started to hit the resale market. That brought up the available inventory in the 8-year period of time. And once I get that 8-year period of time out, the median will drop and these percentages will drop. And that's why I'm saying this is irrelevant. But you can see their DUI at 60 is one of the higher DUIs. So they could have a little bit more inventory than they should. Santa Clara County at 49 days is a balanced marketplace. San Mateo County at 62, balanced marketplace because it's 40 to 80 is balanced. 48 days for Santa Clara County condos, and we already talked about the base cities at 61. So all 4 of the key micro market areas is in a balanced marketplace. Then you're looking at overbidding. Basically, everybody's at 100%, with the base city condos doing the least well at 98.5%. The frequency of overbidding, everybody's about 40%. Get down to Bay County condos and you're at 31%. So you can see Bay Area condos are slightly overbuilt for the marketplace at this point. This is the appreciation of this week, 18% over 2022. 19% appreciation in 2 years would be good unless you went back and looked at, we were at 44% just earlier this year. Last year we were at 25%. So we're actually down from the last 6 months and we're down from a year ago. And that's why I went ahead and shaded that blue to indicating a cooling marketplace. Same concept with San Mateo County. 7% for 2 years would probably be a balanced marketplace. But when you were at 38% appreciation, 7% is clearly a cooling of the marketplace. Same with condos, 9% down from 34. Bay City condos, 0% appreciation. They're selling for the same price as they were in 2020. down from 17% earlier this year. Here's where you're not quite comparing apples and apples, but what you're doing is you're trying to look forward. You're looking at November data, which isn't available till December the 6th. So this particular year, for this first column, I take from last night midnight and go back 5 weeks, 35 days, and plot that as if it was December the 6th. It's interesting. Inventory at 872, which will actually go down fairly significantly. So I would say it's actually in line with recent years. But when you come down here and look at the number of offers accepted, you're at 620, it looks like. If you look back, every one of those previous numbers, including way back here in 2007 at 672, is, 672 is close to 620 in global numbers. But by the time we get to December, the 620 will likely be a lot lower because the number of offers accepted tends to go down. So there's been a huge drop in offers accepted in the last 5 weeks in Santa Clara County. The overbidding at 100%, you can see that's one of the lowest numbers we've had in the last decade. If you get back into the 2000 through 2010 range, you're in the same league. Same on the frequency of overbidding with 40%. Some of these years you had a lot less coming out of the 2007 recession. Then you can look at sale price overall. The median is here at 1.6 million. The lowest 10 percentile is at 1.1 million even, and the highest 90 percentile is at 3.3. And then for people that like to compare apples and apples, you have to go back to October, which is why I like the previous slide. This allows you to compare November 5th to November 5th of each of the past years. And with that, this is a slide you get if you get on early before I do. We're back to the root URLs, and I'm available for any questions if anyone has any. Not seeing any questions, I will end the meeting. Thanks for joining me. See you next week. Take care. Bye for now.